We have yet another speaker from a far jurisdiction. I think it shows you how global multinational transfer pricing is. Isaac Ireri is the founder and director of Transfer Pricing Partners in Nairobi. It is a Nairobi-based transfer pricing and valuations firm, and it is the Kenyan member of Altus Alliance. Now, Isaac is perfectly suited to be a transfer pricing expert. He has US transfer pricing experience, and he has US valuations experience. He was formerly at Deloitte, and before that at EY in the United States. He also has an MBA from the University of Texas in Dallas. So perfectly placed to tell us today about the latest from the OECD on intangibles. So thank you, Isaac. We look forward to hearing from you.
Thank you, Michael. And thank you, everyone, for this opportunity. I was asked to present on BEPS and intangibles. And yesterday someone said we've had a lot about BEPS, but I think the intangibles aspect is quite critical. Now, the OECD recently put out some information and said that when they spoke to the developing countries, intangibles were not a burning issue. In Kenya, we see the opposite. And I'll talk a lot about Kenya, which is where most of our work is. KRA have said it is a key risk. Those are the words they've used to address it. And they've been very active in participating when it comes to the working groups. So they rank it as a very high risk. It's an ongoing problem. And they've also accused tax agents of selling very aggressive schemes. Actually, I have a story. Last year, I was talking to my uncle, who's a former banker, and I told him what I do. And he said, you know, Isaac, I'm going to tell you a story. And he said there was a job open for a financial controller. No offense to financial controllers, if there are any here. And the CEO interviewed the first individual and said, if I sell at 100 and my costs are 80, how much tax should we pay? And he said, that's obvious. It's an arithmetical question. It's 30% of the profit. And so the second candidate came in and said, and he was asked the same question. He said, well, according to the accounting rules, we need to consider a few things. We need to consider the timing. We need to talk to the auditors. And then the third candidate came in. And when he was asked the question, he got up, walked to the door and closed it, came back, sat, and faced the CEO and asked him, how much do you want it to be? So I don't know why my uncle felt the need to address me in that light, but KRA have said that we're being overly aggressive on the matter of intangibles. I just thought I'd put this up. There's a notion that BEPS is something that we have to wait for, but when I look around some jurisdictions like Kenya, we're already doing some things that are related to BEPS. There is the definition of a permanent establishment has been revised, and that's in the Finance Act. There's a limitation of treaty benefits. This was also covered this morning. So it's generally, you put a new proviso in the law that requires treaty benefits to be enjoyed if 50% or more of the beneficial owners are resident in the other contracting jurisdiction. So for example, if we have a structure where the IP is held in Mauritius, if the ultimate beneficiaries are not residents of Mauritius, and in many cases they will not be, then the treaty benefits will not flow, so the structure in effect will not work. Then there are other things we see in our jurisdiction. Yesterday we were talking about capital gains and recharacterization of sales. We have somewhat of a quirk in our income tax definition of